Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right. No extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
Welcome to The Wealth Flow. My guest today is Josh Guggenheim. Josh is a vice president of acquisitions. He focuses on sourcing, assessing, and capitalizing farmland investment opportunities. Josh also plays an important role in water strategy at Gold Leaf. Prior to Gold Leaf, Josh was a senior associate at Lighthouse Capital, a New York-based private equity firm focused on business services. Prior to Lightview, Josh worked as a turnaround specialist at Alvarez and Marshall. Josh started his career with Deutsche Bank. Josh, welcome to The Wealth Flow.
Thank you very much for having me.
Yeah, I'm interested to hear. It's always neat to hear a different type of investment, and can't wait to kind of go through what your company invests in. But why don't we start with your background, if we could? You know, where you grew up and what eventually led you to this type of real estate investing.
Yeah, well, good question. What we're generally doing here is specialty farmland investing, and my background, and there's basically two types of folks who get into this: people who grow up in farms and are farmers, and people who are not. I'm in the latter camp. I am not a farmer initially by trade. I took the more corporate route here. But yeah, my story is I grew up actually in California, moved to Georgia actually for college, went to Emory University there in Atlanta. Ended up thinking that investment banking was the only path in life, and then worked as an investment banker for a little while at Deutsche Bank. Realized that was not a great fit for me, although it was an interesting place to be. I moved from Deutsche Bank and did basically private equity consulting for Alvarez and Marshall. That was a really interesting experience because basically what we were doing was management consulting for private equity owned businesses. So we got a really good view into how private equity works, and also just, got a lot of great experience with some different companies. Following that, I worked as an investor at Lightview Capital, which is a lower middle market private equity firm. Learned a ton there, had a really great experience there. And a few years into it, basically developed a personal interest in real estate and basically, traditional real estate, buying apartments and whatnot. And then this opportunity came up with Gold Leaf, and it struck my interest because, investing in farmland is very much a mix of kind of investing in an operating business, but also investing in a real asset in real estate. So I did it because it was like a great combination to combine my interest in operating businesses with real estate. And it was a pretty compelling strategy. So, that's basically the story. I've been here about 5 years now. We've done close to 30 different farm transactions, maybe $300 or $400 million worth, and continuing to grow. So that's the overview.
Yeah. Okay. That's it's an interesting avenue to invest in. So tell me a little bit about it. When you're investing, you mentioned an existing business. So these are farms that are already producing, and you're taking them to the next level, maybe providing much needed capital to grow. Tell me a little bit more about the strategy as to what your company does.
Yeah, good question. So it's about 2/3, 1/3. 2/3 of the deals that we do, we're buying existing specialty farms. So if you think about an almond farm or pistachio farm, we will buy it and then basically operate it ourselves. And the idea there is like we can buy a good quality asset at a pretty good cap rate. These things can trade at like 10 or 12 or 14% cap rates, so way better than traditional real estate. And then once we buy them, we have a big in-house team that can, basically operate the farm and hopefully improve it. So we do things like organic conversions where we'll take a conventional farm to organic, increase cash flow that way. We'll do things like basically improve the irrigation system to save a bunch of water and basically operating cost on a farm. We use a lot of ag tech too. So that's basically 2/3 of the deals, and then 1/3 of the deals are kind of traditional developments where we'll buy a piece of bare land with nothing on it and then develop the water rights, develop the infrastructure for the irrigation, put in trees, and basically take it from the kind of low value piece of land to a higher value permanent crop farm.
Okay. Interesting. Yeah, we'll maybe take one of those at a time. So that's really neat. Those are a couple different angles that you've kind of talked about, and I didn't realize the types of cap rates that are available for existing farms. So you guys still you take something that's maybe privately owned and build in some types of efficiencies. I love the idea of converting it to organic. Obviously, the end product is going to sell for more if it's an organic. What does that entail to be able to take an existing piece of farmland and
Good question. So it's a painful process. It takes 3 years to get an organic certification. So basically what you do is you buy a farm that's conventional, and then you have to only do organic, or you can only do organic farming methods. So instead of traditional fertilizer, you use compost. Instead of traditional pesticides, you have to use other methods. And basically, less chemicals. And basically over 3 years, if you basically have a 3-year track record where you've done everything with organic compliance, you can be certified as organic. And once you're certified organic, then you can sell the crop as organic. Organic almonds on average are about 80% more expensive than conventional. So a lot of people ask us like, okay, like this doesn't sound that hard. Just like, why doesn't everyone just do this? The answer is, it's pretty tricky from a farming perspective. It takes a little time and capital, and not all farms are actually good organic candidates. If a farm has really high pest pressures or certain soil types, if you convert to organic, you might end up really messing up the yield or whatnot. So you have to really be selective on which farms you convert. And then once you do it, it's a kind of a 3-year painful process. And like you said, you don't get the premium until after 3 years. So it's a bit painful, but the good part about it being painful is that because it's painful, not a lot of people do it.
Mhm.
Only about 1% of California almonds are organic, and that's why the price premium exists.
Yeah, that's neat. And so you've mentioned a couple. You mentioned almonds. What are some of the candidates or farms that pique your interest or your company's interest when you're out there looking in the marketplace? Are almonds obviously is one, but what are what are some of the crops that really tend to provide great yields and are good candidates for what you're looking for?
Yeah, good question. So there's a lot of ways to answer that. I think, what we're doing at Goldleaf is we're doing specialty permanent crops. So we don't do corn, we don't do soybeans, we don't do things like that. Those, by the way, trade at really low cap rates. So like that 10 to 12 range I mentioned is not applicable for like those types of row crops.
Mhm.
But when we think about, what type of crops to get in, there's a few ways to think about it. Number one is basically cost of production and the relative cost of production. So some of these crops can be grown internationally in various places. And when you select a crop in a certain location, you want to pick up that location and crop where you are basically the best global producer, meaning you produce at the lowest cost of pound. So I'll give you an example, like almonds in California, they have among the highest yields in the world. So it ends up being really, really good cost of production. It's really automated, so there's not a lot of labor. It's a really good place to be. Avocados, on the other hand, avocados in California have much lower yields than in parts of South America. So we would not be in an avocado in California just because our relative cost of production would be a lot higher here. Berries or maybe not berries, but take a crop that's really labor intensive. It's hard to do that in California because we have, I don't know what it is today, but $18 minimum wage on a very labor intensive crop, when then you could go to Mexico and it's maybe $2 an hour or something like that. It's hard to be competitive. So long story short, it's all about kind of like how you stack up competitively in a local and global setting. And then the other interesting thing is kind of natural supply constraints, right? So you basically want to invest into crops where the supply can't grow because of basically like climate or geologic or geographic factors. So for example, in California, there's not a lot of room for more people to plant almonds or pistachios or wine or whatever. That's a good thing because demand is going to keep growing, but if supply can't grow, then price will hopefully remain high.
Mhm.
You don't want to be, and that's exactly the same as real estate, right? Like the best real estate returns are in markets where there's a demand for it, but the supply growth can't keep up. That's the same thing how we think about it in farmland.
Okay. And tell me a little bit about, as far as line items from an expense standpoint, when I think farming, knowing nothing about farming, water seems to be one of those big expense line items, especially I would imagine in California. There seems to be a lot of environmental restrictions. I know there's, a lot of strain with, just water supplies everywhere, that California being no different. So tell me a little bit about some of the strategies when it comes to that. What are you able to do to an existing farm to maybe limit the amount of water that's needed or more effectively use it?
Yeah, so good question. So the first thing is to use less water. So you can do a bunch of stuff around like irrigation. We basically, whenever we buy a farm, we put in new irrigation technology. We aren't doing flood irrigation, we're doing micro drip. And then we basically use a lot of technology to monitor the amount of water we use. So like one example is this group called Hortal that helps us figure out how water stressed each individual root system is, so that we know we apply as much water as we need to make sure that the plant is not stressed, but none after that. So there's a lot of ways to basically monitor your water use. So that's kind of operations. And then, the other big thing is just buying the right farms, right? So in California, you've got a bunch of different sources of water, surface water, groundwater, but then you can also lease additional water or buy additional water in certain markets. You can use reclaimed water. There's a lot of different things you can do, but basically what you want to do is buy, farms where the cost of water is low. And it's pretty interesting. You would think about, we talk about acre feet of water. That's the unit of water that we use. There are farms in California where 1 acre foot of water costs you $30. There are other farms in California where during a dry year, an acre foot of water costs you $2,000. So what you basically want to do is focus on places where the cost of water is low, and it's less volatile too between wet and dry years.
Okay. Very interesting. And so sounds like a whole series of things that you're doing there. And I guess does that really kind of fall under that ag tech that you mentioned earlier with the systems that can test whether or not, obviously you're doing some type of micro drip on the irrigation, but then you also are in addition to that actually testing the plant itself to determine whether it's being stressed by not having enough water. And so you can
That's
really,
exactly right. Those systems are very important. What else do? We do drone and airplane flyovers to take, visual imaging of various parts of the farm to see if they're stressed. Um, that's an interesting thing that we do. We do a bunch of other stuff around, basically like automated irrigation. So literally people sitting at home at night can turn on, basically the irrigation systems using their cell phone. They don't have to be there on site off and on. It's like there's a lot of cool stuff now with technology in farming that's making it, a much more, modern industry, I'd say. And, there's still risk, obviously, in farming, weather, etc. But the more technology you can use, you can mitigate some risk, which is important for all.
yeah. And what about so like with almonds, for instance? Knowing nothing, being a layman, knowing nothing about. I mean, obviously, I'm aware of what almonds are, and use almond milk for my protein shakes and
Oh, good.
whatnot. Yeah, yeah.
Excellent.
But aside from that, is it a hardy tree? Is there risk from a pesticide standpoint or an insect standpoint? I mean, are there when you're taking on something like an existing farm, tell me a little bit about the risks involved with it. Is there risks that you're going to lose part of the producing crop, and how long does it? I guess we can get into how long does it take to get it up to where it's actually producing, maybe when we go into the bare land.
Yeah, sure. So, is it a hardy tree or fickle tree? Basically, what the farmers would say is that almonds are relatively fickle. It's hard to farm some almonds in comparison to something like pistachios or olives. Um, in general, though, I'll give you like with almonds, you can have pest pressures, you can have water issues, but most of those basically they might screw up a crop for 1 year or 2 years, but most of those are fixable. There's not a ton of risk where like you have one really bad pest pressure and the orchard is permanently impaired. It might be a year or two of impairment, but it's not so permanent. Um, the one more permanent impairment would be if you had an almond tree and you had like 3 years without enough water, you could permanently kill the tree.
Mm.
That's different than olives or pistachios, where if you basically like don't water it for a year or two and you water it on year 3, they'll come back to life in a good way.
Yeah.
Basically like perform well. So it depends. Each crop is a little bit different. There's other elements of being difficult that we don't have to deal with. I'll give you an example, like with citrus and other types of fruits, the timing of when you harvest in the year and like how quickly you can get to market, etc., your access to cold storage, etc., can really impact the price you receive. We don't have any of that impact on our crops. Another one that we hear about is like, what about wildfires? Does that impact California crops? It doesn't impact our crops at all. And if there's a lot of smoke in the air during harvest, it's not very pleasurable for the people working the harvest, but it doesn't impact the crop. Wine grapes, however, could be really, really impacted. So
For sure. Yeah.
anyway, it's it's a mix. I'd like to say our crops have some risk, but they're probably lower risk than the most fickle crops that you might have heard stories about.
Okay. And what size are some of these farms that you're buying from an acreage standpoint?
Yeah, so the general rule, and it changes a little bit, is almonds are basically 30 to 40,000 per acre in California. Pistachios might be 40 to 60,000 per acre for good ones. There is a lot of competition in the really small space. So like a 40 acre, a lot of people out there want to buy a $1 million small farm just to have, like dentists and lawyers and whatnot.
Uh-huh.
Then at the really high end of the scale, at like the 1,000-acre scale, or maybe like the 2,000-acre scale, that's when a lot of the institutions start playing. where they can like buy a really big asset, boom, 2,000 acres for 30,000 acre, they can write a $60 million check. We tend to play in the middle. So like the best deal for us is like a 300 acre orchard, which might be worth 10 million or something like that, 10, 15 million. In this space, it's really good because it's a big asset with scale. It's too small for the institutions, but it's also too big for most mom and pop farmers. So that's where we like to play. And we actually have, like, I think, a pretty good competitive advantage where we can buy a lot of those deals, buy it quickly, aggregate them at scale, and then exit to an institution, in a few years.
Okay. So are you, when you're exiting to the institution, are you packaging a couple, like a portfolio together for the institution
That's
spot?
right, yep.
Okay. So that's kind of the exit plan. And what tell me a little bit about maybe from an investor standpoint, what does that look like? So they invest with you. What's a typical hold period? And what kind of expectations should they be able to have?
Yeah. So the best way to invest with us is through, we have a kind of core holding fund called Goldleaf Farming LP. This entity owns right now 16 or 17 different farms in California, and we're continuing to add on more. And the plan there is basically investor would invest now, you'll get cash distributions as the farms perform, and then we'll target an exit in maybe year 7 to 10. So we'll keep aggregating more assets. Then year 7 to 10, we'll exit kind of like a big stabilized portfolio to some of these bigger players. And some of the big players might be, there's a lot of actually like pension money, U.S. pension and international pension money, insurance money. There's a few big institutional REITs too who also play in the space. But yeah, that's generally how it works.
Okay. Very interesting. And I guess maybe just kind of going back again to maybe the almond, you'd mentioned just the labor and a little less labor intensive when it comes to harvesting. What does something like that look like with when it comes time to harvest the almonds? And is that a annual crop, or is that several times a year? When do they bear fruit?
Yep, it's a annual crop, and actually, as of today, August 2nd, we're just starting our harvest. So it's basically a early August to September harvest window. And how it generally looks is, it's fully mechanized, right? So you've got some different machines that go out there, some that shake the trees and get the nuts off, some that sweep the orchard floor, some that collect the almonds. Then once they're basically aggregated, we send them to a huller. They're hulled and shelled, and then they're sold to a processor who then sells them basically to the end customer.
Okay.
So yeah, that's how it works. But it's all mechanized, which is pretty cool. We do not want to play like in a crop in California where it would be all hand labor harvested. That's quite expensive, and like it's hard to compete with lower labor cost areas, and also hard to manage. I'd assume so.
Yeah. So, and you've been doing this now for a while. Tell us maybe some of the things that kind of coming into the industry were a little bit of a surprise, maybe to you, or things that you would think, people kind of looking in from the outside, a potential investor maybe don't recognize about the industry that you feel like would be important for the audience to know.
Yeah. So there are a bunch of things. One interesting thing I would say is that the competition for these farms is a lot less than I would have expected, especially compared to other forms of investing. For example, like in the private equity world, for companies or for traditional real estate, if there's a good asset with a good bank, they're going to get 25 different IOIs and 8 different LOIs and a million management meetings, and it'll be a really, really competitive process. This is still, the opportunity is still here because there are a lot of good assets out there where there's basically only one bidder or only 2 bidders that can get it done. So it's much more of, I would say, as of right now, like a buyer's market than I had experienced in other more traditional asset classes. So I'd say that's number one. And then number two is, the operations are actually pretty difficult, right? In farming, like a lot of people say, oh yeah, farming's like a really, it could be easy, like it makes sense. You really have to have operators who know farming to do it well. And like we do all of our operations in-house, and that's pretty important. There are other groups out there that basically, buy farms, then have like a third party manage it. I don't know if I'd be comfortable with that. Like when I first joined, I thought that's a fine strategy. But now that I realize how important like really detailed farming operations are, it's important to basically have the right management, because the farm doesn't just operate itself. It's a lot more operationally intensive than other forms of real estate.
So, what are some of the things that, from an operations standpoint, mentioning that are go on a day-to-day basis? Clearly, it's more than just the tree growing the fruit and making sure it has water. But what are some of those extra things that just have to be overseen on a daily basis?
Yeah, so it's basically, the thing is, I think it's not that hard to manage like a few acres, honestly. Not that I would be particularly good at it, but like a couple acres isn't that hard. But the scale of these farms is really quite big. So like we have a couple farms where we've aggregated together. We've got one farm's really big that we have in Arizona that's about 4,000 acres. So that one is like, 4 times the size of Central Park, all pistachios. It's easy to do a plan on like 1 or 2 acres. It's really hard to do the same plan acre after acre after acre after acre after mile. So you really need someone who's, that's the hard part about the plan, is just like to make sure that everything is being treated uniformly. And having like systems in place to basically check and make sure that everything's happened as planned. So that, that's generally the hard thing. And you basically got like a lot of moving pieces when you're doing a spray event or a harvest event. Is a lot of things going on. In that particular Arizona example, that farm has something like 600,000 different pistachio trees. So you've got like a lot of different activities that you've got to do to every single tree. And it's really a game of like how do you do this with a limited team? So that's kind of the coming up with the playbook is not that difficult in farming. It's coming up with a repeat execution over big areas of land, which is pretty hard.
Yeah. Okay. And is there, I would assume, just like any industry, there's particular types of software and different things that you guys utilize. What does some of that back end look like? As far as operating the farm, what are some of the things that software maybe accounts for? Obviously, you.
Yeah, it's a good question. So we built some of our own software that basically does like farm task management to make sure that things are getting done as needed. So we did that, and we basically use that, use like a Asana or Monday type infrastructure, but built our own. In addition to that, we use a bunch of irrigation tech. So like this Hortal one that I mentioned is pretty interesting. We use a lot of weather tech. There's like different weather stations on every acre of our farms. Like that's pretty important too. One is called Semios that we use. We also use this interesting technology called Field In, which basically monitors tractor performance in the field. And that's important because it can basically come up with data that tells us, hey, your farmers spent 75% of the time in this area of the farm. You guys neglected the other area of the farm. Don't do that. Or something like, you guys did a spray event, but your farmers drove at 10 miles per hour. That won't work because we need to only drive at 3 miles an hour for enough product to basically get on the orchard. So there's like all kinds of different kind of systems that we use to do that type of stuff, which are generally pretty specific. There's no one software that does it all. Maybe someone could come up with that, but That's generally how it works.
Yeah, no, that's fascinating. It really is. I could see that. So with like the spray event deal, if you're moving too quick, it's not gonna cover the crop quite the way you were hoping for it to. And what about the weather one that you mentioned? Is there preparation or things that I guess happen? Maybe it's how much moisture you're getting, or but is there any preparation for like storms that come in or whatever that you're able to do, or is it pretty well you're just at the mercy of the storm coming through?
A good question. There's some things you can do. I mean, the biggest thing you can do is like not buy crops in areas with like certain weather patterns. Like almonds are sensitive to frost. So you basically don't want to buy too many almonds in an area that might like frost. If it frosts over once every 30 years, you can deal with that. And we have crop insurance, which basically pays for bad crops, but you don't want to be in a place that's, going to frost over once every 8 years or 6 years. So that's kind of part number one. But there are things you can do, like you can run irrigation if a frost is about to come, which is, helpful and that helps mitigate it a little bit. There are other, basically other things you can do with like other weather events. But then there's other things where you're completely, at the mercy of nature, and that's why we always get crop insurance on all our farms. And it's actually a very interesting program in America. You can buy basically 80% of your yield in crop insurance. So what that means is if a farm does 1,000 pounds per acre, on average, you can buy insurance to cover up to 800 pounds per acre. So if a freak weather event ever happens and you get 0 pounds of acre, insurance will pay you 800 pounds per acre. So it helps minimize risk to the downside.
Yeah, that's
So, yeah.
Yeah, that's different. I mean, it makes sense. I mean, you spend all year growing something, and so there's, just like anything else, there would be an insurance for it, and it sounds like there is. So, what is that insurance reasonable from a price standpoint? I guess
It is. Yeah, it's really reasonable. It's about $100 per acre, and our entire farming cost is something like $3,000 or $4,000 per acre. So it's a fraction of our total cost, and we can buy this insurance. So to us, it's pretty reasonable. It's federally subsidized, which is great. Other countries don't have that, so that is one nice advantage to the American farmer. But it is important because basically it helps with food security, because if you don't have these programs and a farmer gets like totally wiped out and goes bankrupt, well, then that farmer's not going to be farming next year. They're going to be doing something else. And, total food supply goes down. So it's an important way to basically keep farmers incentivized to take risk and farm, and make sure that enough food is being produced.
Yeah, yeah. Well, let's maybe shift gears a little bit, if we could, Josh, and talk a little bit about, the second instance of the type of investments that you had talked about, and that is the bare land. Tell us a little bit about how that works and what is that investment going from bare land to getting it all uh, able to operate as a farm and then selling it to another farmer or another company? Or are you actually, taking the crop all the way to where it's producing and then the exit happens?
Yeah, good question. So every crop is a little bit different in how long it takes to go from like basically planting to producing its first crop. Almonds, you plant them, you get the first crop in year 3 or 4, and then you get a full crop around year 6. So our typical deal might be like this: we'll buy the land, we'll plant the almonds, we'll bring it up to getting like basically a full crop. That would be about in year 5 or 6. Then we'll hold it for a year or 2, generate some cash flow, issue cash distributions, and then we'll sell the orchard basically, say in year 10. And then the buyer there, it could be a farming family, it could be one of the institutions that I mentioned. It could also be there's a huge opportunity for sale leasebacks actually in ag, where basically you have the farm, you sell it or a part of it, but then you remain the tenant and you basically pay a rent payment, but you keep farming it. And in that case, we would basically keep farming it, and whatever profits we make, keep distributing to investors. But that's generally the plan: is plant it, do some non-productive farming years for a few years, get it to cash flow, do some cash distributions, and then exit year 10.
Okay. Wow. It sounds like there's just a number of different ways. How long does it take? I know it from where it starts producing around year 5, year 6, as you were mentioning, and starting to produce some year 3 and 4. But what how long does it take to actually, go in from a development standpoint, maybe rezone the land, do whatever needs to happen, put in that infrastructure from an irrigation and technology standpoint before you can start planting?
Yeah, maybe it's a year or something. So if you,
Okay.
sometimes you can buy the bare land and can just get started. Other times we will buy actually like a really old almond orchard, and then we'll basically have to take out that old orchard and all the irrigation stuff, fix the ground, if you will, like make some soil amendments, and then replant. That can take a little bit longer, and sometimes farmers don't want to replant immediately after. But it's generally, let's say a one year process. And it's just a lot of work. There's not much like zoning risk or anything, fortunately, with this, which is great in California. California, you're trying to build housing that the state needs so badly. It might take 7 years to get approved. In what we're doing, that doesn't exist at all. Thank God.
Yeah, no kidding. And so what does your portfolio look like from a type of crop standpoint? You've mentioned almond, you've mentioned pistachio. What other types of crops does your company focus on?
We have a date farm, a medjool date farm, which is actually kind of interesting. Right if you think of the corner where Arizona, California, and Mexico intersect, our farm is right there. That's an interesting farm because basically there's a couple reasons. One, the specific type of date, the medjool date, dates grow throughout the world, but the specific type only really grows in a couple small areas: California, Arizona, Israel, and one or two other places. So it is a supply constrained crop. And there's an opportunity. It's basically like a very labor intensive crop, but there's a lot of opportunity to automate the labor. So that's where we kind of, see a lot of NOI in the future. And that one has really good water rights, that farm. So we have one date farm. We have a wine grape farm too, that we actually lease out to another tenant who knows wine grapes better than us. But that's kind of an interesting play too. We've looked at a few other things. We've looked at some olives. We don't own any olives, but we would consider it. We are also looking a lot in hazelnuts, although hazelnuts may be difficult to own in the US. We may have to do an international play there. Trying to think any other crops. We haven't done citrus, although that would be interesting. Apples in the Pacific Northwest are interesting, but maybe already done. There's already a lot of institutional capital there. We did one season of tomatoes actually once. But yeah, that's the mix.
Okay. And when you said hazelnuts may have to be international play on that one, is that just specific to, the growth, being able to grow it, it needs to happen somewhere else, or is there some other?
Yeah, good question. Our view is that there is a really good hazelnut production in Chile, of all places. They have like the perfect climate for it. And the cost of production is really low in Chile compared to Turkey. Turkey is like where a lot of these hazelnuts grow. And also lower than Oregon. Oregon has a big hazelnut market for the US. So my point there was like, we'd like to do hazelnuts. It's an interesting demand story. But if we want to buy at the lowest cost of production, it may have to be in Chile, and not in Oregon, although Oregon would certainly be easier to visit.
Yeah, for sure. And on going back to those dates, the major dates that you were talking about, and maybe I'm wrong on this. Just I'm thinking that seems like kind of a dry climate, that particular spot where all those states intersect. Is that not the case? Is it?
So it is, and that's why this thing is supply constrained. Is because these date trees, they need a lot of intense dry heat, but they also need access to water. And there's like not a lot of places in the world that have that, because there's a lot of deserts in the world, but without a lot of water. In this particular area, the Colorado River flows right through it, and they have really good senior water rights to the Colorado River, and it works really well for dates. I mean, it also works really well for vegetables and a bunch of other stuff that's grown in Yuma. But that's kind of the play, is that it's a unique land situation that is really dry and hot, but interestingly enough has enough water. But you're completely right. If they didn't need any water, they would grow in every single desert, and it wouldn't be a very supply constrained crop. But that's why it is.
Yeah.
So good call.
Okay. And then what about from the market standpoint? Is the primary market the U.S. for the sale of those dates, or and maybe for any of the crops that we've talked about that you guys focus on, is the U.S. the primary market, or are there some other areas that you're exporting to?
Yeah, interesting question. The dates are a mix, although the U.S. is a pretty important market. For pistachios, the U.S. is the most important market. But for almonds, interestingly enough, about 70% of almonds grown in California are exported. About 80% of the world almonds are actually made in California. So just because it's the big global producer, it feeds the world, and there's a lot of export basically, which is kind of interesting. So each crop is a little bit different, which makes it kind of interesting. And each crop also has a different market structure with producers and kind of the supply chain that happens after the farmer harvests the crop.
Okay. Very, it just totally different than most of the guests that we have on. So yeah, no, it's cool, really coul stuff though. It really is, and it's super neat. What about? Tell me maybe a little bit, as much as you can. I know we're limited on certain things we can talk about, but when it comes to from an investor standpoint, you mentioned certain distributions, and then with an intent of an exit there at the end. What are some of the maybe past performance, or whatever you're comfortable or able to talk about? What can investors kind of anticipate?
Yeah, sure. So basically what we're looking to do here is trying to do kind of maybe low teens net IRR returns in this core fund. And that's basically driven by, on average, we'd like to target something like a 10% or 12% cash distribution per year, and then a little on exit. So what we're doing is, it is a cash flow driven strategy. It's not a appreciation heavy strategy. And basically, how it works is, investors would invest into this fund, which owns already a bunch of farms. The farms harvest the crop, they sell the crop. Profits then are distributed to investors over a number of years as distributions, and then in year 7 or so, we'll aggregate the portfolio and look to exit. But that's generally how it looks.
Okay, no, that's great. And so, Josh, if you could maybe just tell the audience how folks could find out more about you, to be able to find out a little bit more about the company. And see the various types of investments, maybe be in tune with what investments you have coming out.
Yeah, perfect. So this is Gold Leaf Farming, and you can see us online at goldleaf.ag. There's a bunch of interesting stuff on our website and some contact information there. You can also send us an email at investors@goldleaf.ag. Or you can send me an email at josh@goldleaf.ag. And we're pretty much an open book around, if you'd want to learn about our funds, or just strategy in general, or just our view on the macro on these various crops. Like, just shoot us a note and we can go from there.
Okay, perfect. And if you have just another minute or two, Josh, I've got a couple questions that I ask every guest. One would be just any advice you might give somebody who's just starting out in their investment journey.
Yeah, interesting question. I don't know. I would say, definitely have to invest, but don't worry if you're like, definitely start, but also start small, if that makes sense. Like the worst mistake you can make is like not invest at all, like keep everything in cash. That's not great. But you also don't want to, go crazy. And a lot of people who are 60, 70, 80 years old right now with a lot of money, a lot of them started relatively small and thought a lot about risk and downside. And very few of them, made that money when they just got started. It took many years. So start small, but do start and learn what you can, and over time it'll certainly pay off.
Yeah, for sure. No, I love it. That's great. How about a book recommendation? Doesn't have to be invested in related. Just something that you've read recently that's been impactful.
Yeah, well, the book I'm reading right now is about a Ukrainian journalist who moved to Israel, which I don't think that many people would probably be that interested in. So what was the book I read before that? It was actually kind of interesting. A book by Dan Ariely called Misbelief, which was actually kind of interesting. It was quite good, and just basically like why people keep believing things that we all know to be untrue. That I love I'm not really a finance nerd and I'm not a psychology nerd, but I really like books that deal with like the intersection between the two. So anything by Dan Ariely is pretty interesting. I'll give that recommendation today.
Okay. No, that sounds good. Well, Josh, this has been great, man. I've really enjoyed hearing about what you guys are doing at Gold Leaf, and just a very interesting industry. So thank you so much for taking the time to be on the Wealth Flow today.
Awesome. Thank you very much for the time and the good questions.
All right. Thank you so much.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.